Welcome back. Thursday was the 9th day in a row that more stocks fell than rose on the S&P 500. But our next guest says U.S. markets are, in his words, in excellent shape. And he's optimistic that the trend can continue in 2025. Let's continue the conversation with Michael Landsberg. He's Chief Investment Officer at Landsberg, Bennett Private Wealth Management, and joins us from Florida. Michael, thanks a lot for joining us. Why would you consider the markets to be in quote-unquote excellent shape at this point? As you know, there's a lot of concern among investors about stretched valuations after 2 consecutive years of big gains.
There certainly has been two good years of big gains, but it always goes back to earnings. I mean, S&P earnings year over year up over 8%. NASDAQ earnings are up over 20%. So yeah, while there's some areas that are being stretched, I look at earnings as a driver and say, hey, earnings are pretty strong here. And I think that will continue. And so we see that for the foreseeable future. Earnings are really a harbinger of things to come. And while valuations in some areas are certainly stretched, there are other areas I think that are pretty reasonably priced.
What sectors of the U.S. stock market do you see the most earnings growth coming from in 2025?
It's going to be tech again. You just saw that with Broadcom today. I mean, you're seeing a lot of that strength around AI. So certainly tech is going to be an area that we think is got a real earnings growth story. And there's some other areas we think industrials will continue to do well. And there's some laggards there where energy is attractive to us now simply because it hasn't participated. But I think the major earnings growth is going to come from tech.
And so you don't see valuations stretched there either, is what I think I'm hearing. Speaking of Broadcom, I'm just going to check in on the multiple on Broadcom. It's now trading at 35 times expected earnings.
And when you think about the growth that's going to go, what they just talked about, how much they're going to get in AI spend, that's not really expensive on a PE to growth ratio. And there are certainly areas of the AI space that have gone up way more than they probably should have. So I think you got to look at it by individual security. But a name like Broadcom, for example, doesn't look expensive to me at all. But there are other areas I think that are cheaper. And one of the names that we like here is Adobe for that reason. It's got an AI story, but really hasn't participated yet. And I think you've got to do a little bit more homework than to come and look at something like a Broadcom or an NVIDIA, which is up nearly 200%. I think some other areas are going to do well, but you have to do a little bit more homework.
You also like the industrial sector, the energy sector. Why so?
I think, this incoming administration in the United States has gone from a position of being, energy independent to now energy dominant. So I think you're going to look and see more energy, being kind of distributed out of the United States. It plays well for a company like Baker Hughes, which is in the oil field business. 60% of it's oil field, but 40% is tech. And I think there's a push for companies that are getting oil out of the ground and energy overall to be more efficient. And I think that's a scenario that they kind of get the best of both worlds. They've got, the natural resource, but also they're going to do it more efficiently, better for the environment. I think that's a stock that's got some upside here, given the fact that I think this administration is going to be more pro-energy than maybe the previous.
Okay, you mentioned Adobe as a stock you like. You also like Baker Hughes. Let's zero in on Baker Hughes.
Yeah, that was that story there, that 60% of the business is oil field revenue, 40% is going to be energy tech. I think energy tech it's got a higher multiple. I think it's really misunderstood. And if you can get stuff out of the ground more efficiently and find it without having to drill as many holes, if you will, I think that's going to be positive for bottom line, as well as, again, from an environment, energy-wise, that this administration is going to be pushing more and more energy independence and energy dominance from the United States.
And Copart is a supplier of materials to vehicle suppliers and insurance companies, a variety of services. I'm just reading from Bloomberg's definition, selling into the salvaged vehicle market. Why do you like Copart?
It's an online, really an auction business, and there's really only 2 players. So you've got the 2 of them have roughly 80% of the market, double-digit revenue growth for the last 10 years, and huge margins. So again, high barriers to entry. You and I just can't just open up our salvage business and start dealing with companies across the country and insurance companies. So they do have a kind of a moat around them, if you will, those 2 businesses, and consistent growth over time. And obviously in the United States, you're seeing more and more salvages with hurricanes and things like that, natural disasters. So we don't see that supply of salvage vehicles and just used vehicles slowing down anytime soon.
Diversification is always important for investors. People in your world are always urging investors not to be over concentrated. What does diversification look like in today's markets?
I think that's a great point. I've been trying to make this with a lot of investors, is owning the same theme, whether it's in different sectors, is not really diversification. So we'll take AI. If you own a chip maker, but then you own data centers, and then you own copper, and then you own air conditioning that all service the AI/data center business, that's not true diversification. So I think you've got to diversify themes. AI can be a theme, and it should be an important theme, but you should have a cybersecurity theme. You should have maybe an obesity theme or a longevity theme or alternative. Having different themes that work differently is different than having basically the same theme where you bought 6 stocks across 6 different sectors, but they all go up and down the same. Correlations have gotten much higher, and I think people have to be careful when they're buying things. Are they not correlated with each other? That's the true definition of diversification.